Sure.
Hello, and thank you everyone for joining today's webinar. I see new audience who have joined for the first time. So I'll quickly talk a little bit about TIE. My name is Anil Ramanini, and I'm the Executive Director of TIE SoCal. Our President, Anshuman Sinha, couldn't join today. So TIE is a non-profit organization, and it was founded in 1992 in Silicon Valley. TIE SoCal is the first chapter. It was founded 23 years ago in Cerritos. TIE is a great networking place if you're looking for growing your business or you need mentorship. TIE is the right organization. Due to COVID-19, we are hosting all our events virtually. TIE events are held on Wednesdays. So far, we have hosted 6 startup pitching events. It happens on third Wednesday of the month. There are 2 types of membership. One is a regular membership and another one is a charter membership. Charter membership is an invite-only club. Existing charter member can invite you to the group, and there is an application process. After filling out the application, board will review it and approve it. If the benefits are immense. This is the right group to interact, network, mentor others, or get mentored for your business. Charter members can interact with other chapters in 14 countries with 61 chapters. Today's moderator is Rashi Bari Chitnis. She is one of our charter members. She leads the TIE SoCal Moments Initiative. She's a CEO and founder of Shunya Digital. They help kids learn languages in a way that is fun and engaging. She's very energetic, very helpful, and she always helps with a smile, and a great mentor. Thank you, Rashi. Please go ahead.
Thank you, Anil. That's a warm introduction for sure. Thank you, everybody, for being here. I know it's a Wednesday evening, weeks are going by, at least for me. I don't even know what day of the week it is, and we're almost coming close to the fall season. The year has gone by. But even in the pandemic, we've done efforts to bring the community together. And under the TIE SoCal chapter, we've had this TIE Women Initiative, in which we've been interviewing and bringing candid conversations with women of influence. And today, it is my privilege to welcome Caroline Kassie as a guest speaker. Caroline is a VC, lawyer, and producer of documentary films focused on social justice issues. She recently joined Chelsea Clinton at Metrodora Ventures, a new VC firm with a values-conscious approach focused on health and learning businesses. So it is my privilege to welcome you. Welcome here.
Thank you. Thank you so much for having me.
You've had an amazing career, and you started by being a corporate lawyer, then you became a documentary producer, and now a VC firm. So I like to start at where it all began for you as a lawyer. Why did you get into that profession? What brought the change for you?
Yeah, so I was just one of those kids that sort of had an idea of what I wanted to do and just had this sort of vision for what my adult life was going to look like. So I went to college and structured my sort of learning and curriculum around pre-law and knew that I was going to law school right out of college. So I started law school at 21 years old. I was quite young to sort of be setting out on a path that would inform, the rest of my career, but that was where I ended up. And so I started my career, as you mentioned, as a corporate lawyer at Skadden Arps, practicing M&A and private equity law. And I knew sort of from the get-go that the big law firm route wasn't the best fit for me in a long-term capacity. So in thinking through what I wanted to do next, venture capital was on my radar because I'd had this wonderful mentor and boss who I'd worked for at Spotify while I was in law school, who had really exposed me to the world of early stage investing and mission-driven technology companies. And so I knew I wanted to land somewhere within that ecosystem. So I ended up with a job at a pre-seed venture capital firm called Beanstalk Ventures. And shortly after I joined Beanstalk Ventures, we ended up spinning out a new investment firm called Blockchain Ventures. And I co-founded this firm, Blockchain, to invest in the blockchain and cryptocurrency space. And so part of my role was starting up and running and raising a venture capital firm. And the other part of my role was developing a thesis around the blockchain space and the things that we were seeing within that ecosystem. And it was a really exciting and interesting and unique experience for a number of reasons, but it was predominantly really exciting because we had the opportunity to work with such a nascent and potentially transformative technology and to look for the next generation of internet companies, really. So I was doing that for about a year, and I ended up having a somewhat serious health issue. And it took me about a year to find a diagnosis. And in that year-long process of searching for a diagnosis and the right providers and specialists, I found myself the user or patient or customer of a number of venture-backed women's healthcare and wellness companies. And I'm extremely fortunate that my health issue was relatively low grade, and also that I had the resources and support to navigate what I found to be this very tangled and complex web of providers and payers and wellness services and supplements. But I knew that put me in a very tiny minority of patients that I was able to sort of manage my healthcare situation and get it under control. So I started to think about how the healthcare system as it exists today is broken, and why it is that patients have never really been at the center of it. And what I'd experienced was that when we are sick and we encounter the healthcare system, we are at our weakest and most vulnerable, but we're facing a great amount of information asymmetry, and we have to deal with inefficiency and a lack of transparency. And I'd experienced this real lack of human connection and personalization, and found that that really breeds mistrust and cynicism among patients. And on top of all that, I'd observed that the system amasses large amounts of sensitive data without providing anything in return to its trustees, the patient. And because I'd gone through this health journey with both my patient and my investor hats on, I started to think about how these were all problems that were highly conducive to the application of technology. And so they were places where venture dollars could be deployed to help fix the system and to help broaden access to quality care. So I decided to leave my job with Blockchain to look for an opportunity that was aligned with that thinking. And I was approached by Union Square Ventures, which is a New York-based venture capital firm that I'd always had a tremendous amount of respect for. And they asked to introduce me to Chelsea Clinton. And USV had gotten to know Chelsea quite well over the last several years because she had been recruited to sit on the board of Nurex, which is a portfolio company of theirs, which is working on solving the birth control access gap. And Chelsea was wrapping up some of her commitments and thinking about how she wanted to spend her time and energy and where she felt that she could have the most impact and create the most value. So we started spending a bunch of time together. We started looking at investment opportunities together, and it became pretty immediately obvious to us that we were really deeply aligned on this sort of values conscious approach to investing and how we wanted to think about filtering for and evaluating entrepreneurs and companies. And we also realized that we had this real mutual passion for the opportunity in health and learning. And we also learned or realized that USV had match made us because we had these very complementary skill sets and experiences. And so we launched Metrodora this year in 2020, and we hadn't taken a single fundraising meeting when the pandemic hit, and we all started to shelter in place in our homes. So needless to say, it's been an incredibly interesting experience launching a new venture and fundraising and looking at companies that are building within the healthcare and education ecosystems.
Yeah, that's a really, really powerful story. And thank you for sharing that with us. I have so many questions as a follow-up, but I strongly believe that all of our past experiences are there in place because they're leading us to something bigger. And then you find that bigger moment. Maybe this is that bigger moment for you, both of you. I want to talk about partnership, because any great venture is only successful if it's a strong partnership. I've gotten a chance to meet you a couple of times, and I recently got a chance to meet both of you together, and it feels like you both have a mutual respect and an understanding for each other. So are you both in it full time?
Yeah. So Chelsea has, other pieces of her life where she spends her time. She has nonprofit work. She has a commitment to the Clinton Foundation. She sits on a number of boards. She has a children's book series, one of which actually launched last week. And we see a lot of her other activities as really additive to what we're trying to do. And this is her sort of full-time business activity.
And for you, it's a full-time, yeah.
Yeah.
And
as you mentioned, I have a little side hustle as a filmmaker, a film producer, which I can speak to. But yes, this is my full-time day job.
Yeah, that's a really interesting project too, producing a movie. Let's start there, and then we'll come back to the VC fund, because I think that probably led to a pattern or the things that you want to support. Something brought an experience there that you're bringing in here too. So you produced a film. Let's talk about that and what got you into producing it.
Yeah, sure. So I have a film production company with my younger sister, Emily, who is a visual journalist and a filmmaker. And she has spent most of the last decade creating and developing content around social justice issues and really giving a voice to the voiceless. And I'm incredibly proud of her for that. And the film that we worked on somewhat recently together is called A Girl Named C, and it's a feature documentary about child sexual assault and one victim of child sexual assault, in particular, C, who is a teenager now, but quite tragically, when she was a child, was the victim of an act of sexual violence by another child. Emily spent a summer filming C and her family, and when she got back from that summer with them, she shared some of the footage with me, and I was really deeply moved by what I saw, and I asked to help. And at the time, I was still practicing law at a law firm, and I think I was probably looking for some more meaning in my life, but I really wanted to help Emily kind of bring this project to life. So I started helping her source vendors and with some of the legal research, and she asked me to join in a more formal capacity. And so we launched our firm together, which is a family business, I guess, if you will. And you're right that the experience of producing and showing this film to the world did really inform my decision to make a bit of a career change and to focus on these more impact-oriented categories. And the film, we were when the film was being made, there was a national spotlight on sexual assault on college campuses. And while we are in post-production, the Harvey Weinstein story broke and the Me Too movement gained momentum. But we felt there was a lot of advocacy to be done around the film because it touched upon a part of the dialogue that no one was really talking about, and that was why children may perpetrate violence against other children, and how we can do a better job of protecting our youngest, most vulnerable, most impressionable. And I think, some of that has really carried over into what I'm doing now. And I also think that my experience presenting the film and interacting with audiences at film festivals and at screenings really solidified my belief in the power of storytelling. Yeah. And that is something that I think informs some of our investment decisions, and storytelling is something that we see as a component of brand building and a tool for customer acquisition. And I can give you an example of that from our current portfolio. At the height of the protests in June, a few months ago, Chelsea and I received an email from Simone Tate, who is the founder of Poppy Seed Health, which we'd been evaluating as an investment opportunity for about a month. And Simone, in her email, wrote about her pain and distress as a Black woman and pointed to the statistics on the disproportionate number of Black people affected by COVID-19. And she shared her fears about being a woman who has had a miscarriage and who is struggling with her infertility in a world where she is 5 times more likely to die in childbirth than a white woman. And she spoke to the reality of raising a child in a world where the color of their skin makes them a target for police violence. And Simone's story is part of her lived experience. And the company that she founded, Poppy Seed Health, is a telehealth platform for prenatal and postpartum care. And it was really born out of her experience going through a miscarriage and her fertility journey. And lived experience is a really key part of the way that we think about our investing mandate and how we filter entrepreneurs and companies. And we think that lived experience creates a deep empathy for and a commitment to serve the market that you're building for, and a real moral imagination to serve a business in both the present and the future. And Simone's ability to tell her story, I think, is so compelling and impactful in bringing others into her business journey.
This is such a powerful story. This is just, I have goosebumps just listening to it. Because on one hand, you both have joined forces together and formed a VC firm that is going to empower entrepreneurs that are bringing social issues to a bigger platform and need that kind of backing. And on the other level, you're also sharing how you backed another woman entrepreneur. I mean, there are these statistics that show there is just 2% of funding, VC funding, that goes to women entrepreneurs. And it's really sad in times like today, when every VC firm out there says, well, we want to back VC entrepreneurs. There's not actually a check written. So the fact that you went ahead and made that investment as a seed investment is amazing. So what is the kind of deal flow that you see? How big is the size of the VC, the fund? And was it hard to launch during this time? I
Yeah.
guess these are lots of questions put together.
Yeah. So I first want to address, I'm so glad that you raised this about female-led firms and female founders, because I think that while we've certainly made some progress on this issue, and there has definitely been, especially in the last 3 months, a tremendous amount of rhetoric around backing and supporting female and diverse professionals, there's still so much work to be done. And, you know, you said that, and I have these searing memories. You know, I think most people participating here tonight, and most women probably still experience some form of gender bias. You know, like I was just going to say, I have these searing memories of when I was working with my former business partner who's male. Every time we were trying to schedule something with a prospective investor or a company or a vendor or anyone, we'd both be on an email, and people would just automatically assume that I was an admin, and would, you know, write an email being like, okay, moving Ken to BCC, Caroline, can you let us know what Ken's availability is? And that, you know, I think that motivated me. But I think, you know, it's just indicative of how much work we have to do about having more women in the room, more diverse investors to make decisions, because women make up 14% of investment decision makers in venture capital, and only 25% of investment professionals in VC are minorities. And the reason why that's so distressing is because a lack of diverse fund managers means a dearth of diverse founders. And only 2% of the $130 billion in venture capital money that was invested last year went to women. And this is problematic because if you think about how venture capitalists meet companies and make decisions, there's a selection bias. We invest in people we trust, people we meet through friends who went to our alma mater, who present like us, who communicate like us. And this creates a reinforcing cycle that leaves diverse talent out of the market. And we don't get to hear from these collective voices. And what Chelsea and I have learned, and what I learned in my previous role, is that women and minorities think differently. They run companies differently. They communicate differently. And it's hard to recognize and identify that if you don't have female and diverse decision makers on your investment committee in the room with you. So we at Metrodora, we really want to embrace different cultural styles and ways of communicating and new ways of assessing market opportunities. And we are so proud that of the six companies that we've invested or committed to, and the two that we're sort of like in a paperwork stage with, all 8 of those companies have a female and or diverse founder. And, you know, women and diverse founders, they'll identify market segments by virtue of where their empathy lies. And there's so many examples of highly successful female-founded companies who struggled to raise capital at the beginning of their journeys because traditional investors didn't understand their market segment. And so part of what we're doing is trying to change those dynamics. So that's the first part of your question. Second part, I think you asked about fund size and check size. So we're raising a $30 to $50 million pre-seed and seed fund. We are writing $500,000 checks and reserving really meaningfully for follow-ons. And I think the last portion of your question was around working and raising a fund during COVID, during the pandemic. And what I'll say about that is, as I mentioned, we haven't taken a single fundraising meeting before the pandemic hit. And so I think the main challenge for us has been not being able to be face-to-face with people. I think both of us are really social beings who really enjoy interacting, particularly with entrepreneurs, in addition to prospective investors. So the transition to remote, while it's working quite well for the two of us, it's definitely a challenge. It's an added layer of complexity. But I think there are a lot of things that trouble us about what's going on in the world right now, and our current leadership, the lack of testing capacity, the lack of preparedness for a second wave, the mental health crisis that's taking place. But I think we're also excited about the way that COVID is forcing the healthcare and education systems to shift quickly, and that it's this immediate macro event that will change these industries forever. And so we were just getting ready to start sending our deck out to go to market with a set of hypotheses about how we felt that consumer behaviors were going to change, and where we felt innovation needed to take place. And I think, necessity really is the mother of innovation. And we think that breakthrough technologies and innovative services will have been catalyzed by this emergent need to help us get through the crisis and come out the other side with a healthier and more equitable world.
Yeah, this is so interesting. You touched on so many different points, and I want to chime in and say you're absolutely right. I mean, I think women are put on a different bar, just like you had a partner and it was automatically assumed that he's the lead investor, whereas you both had a partnership. I mean, as an entrepreneur, I've experienced the same. Not that I have a co-founder, but when I went out to raise my seed round last year, I would get back these vague assumptions. I mean, we are in ed tech space, and ed tech is growing through such an exponential growth phase, and we are growing 50% month over month, a level of traction that most entrepreneurs can't talk about. But when I found myself pitching, I would hear these investors say, well, I don't know, maybe we just want to support her because it's a good company to back, but they couldn't see the ambition behind it or how high it can go. So I think there is one thing is how you are perceiving the other people. And I think in that investment world, the more women investors we can get, the more hopefully that will lead to a change, because the change is happening from top down. So I'm bravo to you guys for writing those checks and forming this fund. But were you guys nervous when you decided, well, we're in the middle of the pandemic, and as a VC fund, you still had to raise money to go forward with it? Or did you think even once, well, maybe we'll launch next year?
I'd be lying if I say that I didn't experience, fear and misgivings about what's been going on in the world and sort of how that impacted our progress and, potentially delaying the raise of our fund. And I think what frightened me even more than that is that the outcomes of the pandemic are shaping up to be highly uneven. And so, I'm speaking to this sort of K-shaped recovery. And so I think, even if we may have felt that it was a risk to go to market now, and we maybe briefly thought through waiting till 2021 and just seeing what was happening, I think we were even more motivated by the opportunity to back the people that were innovating in these categories. And we felt that now is the time to be looking for healthcare and education companies. So to the extent we had fears, we were able to overcome them for that reason. And what I'll say is that Chelsea doesn't need to be doing this. She's accomplished so much in her life. She has so many opportunities in front of her, but this was true. She's one of the most genuine, authentic people that I have ever worked with and really ever met. And so this is truly how she felt she could create the most value. And the way that she felt that early stage investing was the place where she could help to create the change that she wanted to see, particularly in the healthcare space.
Since you talk about early stage, when you have investors investing in early stage, entrepreneurs have a lot to learn. And is there, other than the check size, are you also providing mentorship to these entrepreneurs, and how are you facilitating that?
Yeah, I think that's a really core piece of what we're doing. We want to provide on-the-ground resources, strategic advice, transactional expertise, and post-investment support for our founders. And we place a lot of emphasis on building trusted relationship with companies, and we feel that not only increases the probability of successful outcomes, but it's also sort of why we're doing this. So while it's not our mandate we don't push for a board seat necessarily, we are in extremely frequent communication with all of our founders. So we talk to them beyond a monthly check-in. We want to be, we say that we want to be the first phone call when something is going right, but also the first phone call when something is going wrong, that our founders can really trust us as a resource and a sounding board.
Perfect. That you answered it perfectly. And then how are you getting deal flow? How is that coming to you since you are a new fund? How are people finding you?
Yeah, so part of the genesis for this fund was that Chelsea has always had a really tremendous amount of deal flow in these spaces because it's where she spent her time kind of looking at these problems from a nonprofit lens or an academic lens, and more recently through her angel investing and her board experience. So she'd had no formal place to put the deal flow, and so that was part of the reason why we decided to launch Metrodora. We also have a strategic partnership with Metrodora Ventures, which is the firm that introduced the two of us. And they have historically been focused on the Series A opportunity. So oftentimes they'll meet a company or an entrepreneur or have a thesis about something that's too small or too early for their fund size. And so we are now a trusted partner of theirs, and a place where they can share deal flow and sort of what they're thinking and seeing in the categories that we're focused on. And I have worked in the VC space for a few years now, so have a really nice network of co-investors and other firms that I've really enjoyed getting to know over the last few years, and most recently specific education and healthcare specific firms and angel investors. So that's been quite wonderful to sort of expand my own network. And yeah, deals come from sometimes the funniest places. For example, the first investment that we made together is in a company called Alula, which is building a cancer recovery platform. And Chelsea and I actually met Leah, the founder and CEO, through my sister, who met her at a dinner party. So, sometimes it's just about being in the right place at the right time. And other times it's about working with trusted partners.
Yeah, that's amazing. But every VC fund has their own investment thesis. And what I know you talked about wanting to invest in social cause issues, but when a company comes to you, what is your investment thesis? How do you evaluate the team? Are there certain parameters you're looking at, like the team or revenue? What are those, and how do you look at a deal?
Yeah. So we have a number of filters and criteria that we think about, and are quite disciplined in our approach in applying that set of filters through which we will evaluate a deal. And so the first thing that we really think about is this lived experience thing that I've mentioned, and looking for visionary, persevering, purpose-driven entrepreneurs. And when we think about evaluating an entrepreneur, we like to work with people who can iterate on an idea, who have a lot of grit, who are nonconformists. Those are the sorts of qualities that we think about when we meet entrepreneurs. And then in terms of companies and business models, we are specifically looking for companies that are fulfilling unmet consumer or patient or learner needs. And we think about massive market sizes with clear paths to $100 million in revenue.
Mm-hmm.
And we think about moats, and we think about efficient use of capital. But I'd say, the sort of overarching part of our investment thesis and what I think makes us unique is that while we're not a social impact fund, we are looking for companies that align purpose and profit. We're focused on large, historically antiquated industries that are undergoing systemic change, particularly in light of the pandemic. So by definition, companies that are successful within those categories are going to have great social impact. I think we're at this really interesting moment in history between the upcoming election and the social upheaval that's taken place over the last 6 months, and the COVID crisis, and the really extreme polarization in this country. And I've been thinking a lot about how there's a real tension between the Milton Friedman doctrine of maximizing shareholder value and companies that want to engage with all these things that I just mentioned and become political and play a more active role in social justice issues. And Brian Armstrong, who's the founder and CEO of Coinbase, which is the largest cryptocurrency exchange, made headlines this week because he published a blog post that in effect said the company was just going to be heads down and focus on its core mission and stay away from corporate charitable efforts and political engagement. And regardless of whether you agree with that stance, I think if you're trying to change the world, it's much more durable to do what Coinbase is doing, and that is to make money from a product that inherently helps people and society. And this is part of the reason why we filter for morally motivated founders and companies. We do not think that purpose and profit are mutually exclusive.
Yeah, I couldn't agree more. We are in that space, so I couldn't agree more. And we do have, like, my first investor is an impact investor. I mean, he came from the VC world and he only invests in impact-driven companies. So I think there is that change that's happening in the VC world overall, that many people say, well, we want our money to grow for sure, but we would rather put it in companies that have a social impact or can make this world a better place. So we are seeing that change, definitely. But in terms of somebody, an entrepreneur out there in your space and wants to connect to you guys, what is the best way? Are you open to looking at deals? Or is your website up? Is there a way for them to approach? Or do you only look at stuff that comes through references? Because that is a mandate by a lot of VCs.
That's a good question. So for right now, because we haven't closed our fund yet, we are investing at a much slower pace than we otherwise would be, and are probably more selective in how we're allocating our time and resources. Mm-hmm. Something I learned from my former business partner is to take every meeting you can, because there's always something to learn and a way to be helpful to someone. And that actually will only really kind of increase your deal flow as time goes on, being truly entrepreneur friendly and taking every meeting and that sort of thing. On the flip side, there are just two of us, and so our time and resources are scarce. So we will not look at a company that is not within the two categories that we're investing in right now. And there are places where we've firmly said that we won't invest. So something like biotech or pharma, where we don't feel that we can really add value, we won't look at a company that's building in that space. And then if it's immediately obvious to us that the company doesn't meet our criteria, right now we probably wouldn't start evaluating that company.
When do you expect to close the fund? Are you looking at closing it soon?
Yeah, hopefully by the end of the year.
Oh, good, good. I think we have about 15 minutes left, so I want to be conscious of the time and ask if there are any questions by the audience. I can filter them out. But this has been a really great conversation. I mean, I've learned so much, and even in our conversations, you've been always very upfront. So it's really nice when you get that from the VC world, you know. So I'm glad. I think, Anil, do you have a question? Yeah.
I personally have a question later, but I just put in our audience saying if they have any questions, please go ahead and post them. Waiting. So in the meantime, I do have a question for Caroline. I'm glad you're only started this VC fund, and you're looking at more social, that aspect. And many of the VCs, they don't do that. And you said you want to do the woman, like Rashi said, only 2% or some women founders get funded. I'm really glad. In fact, I'm working with a couple of startups right now. It is co-founded by me, and there's another woman, minority Black woman out of Louisiana. We started. We are doing it in mental health space.
Great.
Lonely, because there's a lot of people now, more than ever. People are lonely, or anxiety issues, too many. And what happens is there's not many therapists or whatever. They can't afford,
Mm-hmm.
So we're trying to launch this, and since you said that, I was going to talk to you or email you about those two.
Great. Yeah. Feel free to email me.
Yeah.
Mental health and behavioral health is a place we have not yet made an investment, but it's a sub vertical that we're really interested in and developing our thinking on. I think there's a tremendous amount of opportunity. Right now, there have emerged some pretty big players, just generally in like the mental health, in the telehealth space, things like Talkspace, providing virtual therapy and selecting therapists, and that's really interesting. But we think that there actually will be potentially new business models created in mental health as this generation of mental health companies helps to destigmatize therapy and thinking about well-being and wellness from that perspective, and that in doing so we can actually move towards a place where new models like group therapy and incorporating VR technology into therapy and digital therapeutics will become more common.
Yeah.
Telemedicine is an extremely interesting space. I mean, I'm not into telemedicine, I don't understand, but it's an extremely interesting space because there's just so much happening. I mean, even when you talk about anxiety, there's anxiety among professionals, anxiety among adults, but what about the anxiety among the teenagers, that are always on social media, and then anxiety among kids now that are being educated on Zoom the whole day. So I mean, this is going to require quite a bit of innovation, this field. So if there is stuff that you are seeing, some different innovations through the deal flow that you're getting, it would be interesting if you could share that with us.
Yeah. So Poppy Seed, the company that I mentioned earlier, I think is doing something really interesting. As I mentioned, it's a telehealth platform for prenatal and postpartum women. And the way it works is you are assigned and it's supported by midwifery and doulas. And you are assigned what's called a Poppy Pod, and have access to 24/7 support via this asynchronous chat product. And I, despite the fact that this is positioned and in its current iteration, it's really a telehealth platform for expectant and new moms. I actually thought that this was a really interesting entry point from a mental health perspective. So yes, we know that there is a mental health crisis in this country. The CDC actually quantified the toll that the pandemic is taking on our collective health. They published something stating that 40% of adults are struggling with depression, anxiety, or substance abuse right now. And they also released a statistic around teenagers and young people who are struggling with anxiety and having suicidal thoughts. And the numbers are really just staggering. But despite the fact that people are reporting these issues, a very small proportion of the people who are struggling with the mental health issue actually go out and seek care.
Yeah.
And so the reason why I think what Poppy Seed is doing is adjacent to mental health is because in seeking care for a very specific kind of condition or pregnancy, it's an entry point into a support system that you can then that can then retain you as a patient as you move forward in your journey as a new mom. So in postpartum depression, or in caring for and raising a baby and a young child, and all of a sudden you've sort of normalized the behavior of seeking care, and you're now a part of this ecosystem in this community. And so I think that's really interesting. Some of the pediatric mental health is a place where people have been paying a little bit less attention. There's a really interesting company called Brightline that's a little too far along for us, but it's a company that we're a big fan of. Daybreak is a company that just came out of Y Combinator, also focused on adolescents, super interesting. And I think we'll see a lot of companies that aren't specifically mental health companies, but that are creating these secondary network effects of community building. And that is, from my perspective, a really critical component of solving this mental health crisis and helping people find a sense of community and belonging. And so that might not be through one-on-one therapy. It might be in these sort of smaller social networks that we're seeing around certain interest groups or patient populations. But I think we'll start to see the definition of behavioral health expand.
Yeah, and it's a kind of a very interesting entry point from a VC thought process, because you're really entering at a certain point that then opens up the entire ecosystem. Because if you connect with the moms when they're pregnant, then you kind of have entered, and if they start getting care for themselves, then they start getting care for their children, and so it kind of builds on, and you've entered that ecosystem, and all of them are just part of that. So it's a very, very interesting point.
Yeah, parents are an incredibly important market segment, because I'm not a parent, but parents are more likely to think about and spend money on and kind of take out insurance policies around their children's health. So you can change consumer behaviors by targeting parents, things like, like data sharing and note taking and those sorts of new technologies that are being applied to what's really like a monolithic healthcare system, and then in changing those consumer behaviors and capturing the parent, you can actually have them start changing their behaviors around their own health.
Yeah, I mean, and that segment is a segment that grows pretty fast too, because when a parent likes something, they more often than not will share it with their group of friends, and the more often than not, those group of friends are going to try it because it came through a reference. That's how we find doctors. So that's a really, really interesting segment. I mean, in the edtech space, that's literally the same model that we follow. One parent likes something, then they'll tell the other parent. So that's really interesting.
It's a highly engaged consumer segment. That's for sure.
Yeah, can go pretty viral too, pretty fast. So that's an interesting space. Yeah, I don't know much about telemedicine, but here in California, you do see that quite a bit. You do see people going away from the traditional care that is being given by the big pharma companies and wanting to have care when they actually need it. So, but I think we're coming at the end of the hour. And this has been such an interesting chat for me. I mean, I've learned so much about so many different things, and it has been just wonderful getting to know you. So if there aren't any more questions, Anil, do you have any question, or Anshuman?
Yes. No,
Anil has a question.
No, I was going to say thank you so much. And, Caroline, as a Thai SoCal, we are a nonprofit organization. We support many of the startups. In fact, every month we do a pitching event. And we do, for example, third Wednesday of every month. And we get like 20 some startups that they apply. So our board, we review, we have a pre-screening committee. We review them, all the startups, and then we select like 4 of them who get to go and pitch. In fact, one of the initiative where Rashi is leading, Thai Women Initiative, which is Thai Global Women Initiative, they're having this year first time. We selected 4 startups. 1 is a winner and 3 runner-ups. And they get to, the winner, all of them are women founders. And they get to pitch, go through the mentorship 3-month program and the whole accelerator program. And then they get to pitch at Dubai for competition of $100,000. So, I would like you to also come in as a panelist on one of these pitching event on third Wednesday. Every month we do, and maybe we can even look at the deal flow and all those things, vice versa.
Great.
Cool.
Yeah, that's they do get a really interesting deal flow, and I'm sure you guys would love to exchange notes.
Yeah.
And there has been a lot of support. I'm glad you're giving the support to the companies that you're funding, women or or male entrepreneurs when they're starting off on a startup journey. It's a hard field, and you've been involved with two really difficult ventures. Filmmaking is not easy, and I'm part of that world as well. When you make a movie, take it out to film festivals and produce a movie, that is as hard as a startup. And all you can ask for are partnerships and good mentors. So the fact that now you're on the other side and you're providing that is amazing. So thank you for having me. Thank you for being here today. I immensely enjoyed the conversation. And Anil, you can share it with us.
Thank you, Caroline. Really appreciate it. Have a good evening. And we will be in touch soon.
Great. Thank you so much.
Bye-bye. Thanks.